You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 20th day of February, 2026. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one is our live training room, so to get in there, you have to be one of our traders or taking your 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial. It's going to take you about 3 minutes of your time today. We'll get your indicators up and indicating today. Your trial will officially begin Sunday night at 6 p.m. Eastern. That's when we go to work. And your trial will run all the way through next week until Friday afternoon at 5 p.m. Eastern. 5 consecutive trading days. The weekends don't count against you, and there's no credit card required. We want you focused on what's being taught so you can make a well-informed, intelligent decision as to whether or not trading is right for you. Now, yes, you will gain access to the live training room for 5 consecutive trading days, but there's more. For 5 days, we treat you like you were already a member, a passport holder. We give you access to everything: the strategy, the indicators, the Logic 247 alerts, the concierge trade alerts, the weekly trading zones, the discussion group in Telegram, so much more. We do this because at the end of your trial, we want you to be able to make a well-informed, intelligent decision as to whether or not trading is right for you. So be sure and stick around at 1 p.m., about an hour from now, 55 minutes. That's when Michael will join us for a recap of what happened this morning in the live training room, and then a little bit of live trading as time and the markets permit. As you can see on the left side of the screen, that is our schedule for each afternoon broadcast. We'll dive into our daily devotional here in just a moment. We are beginning a brand new topic today, and we're going to be in it for a few weeks. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back for this broadcast, the noon broadcast, which, unlike the morning broadcast, this one is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's two different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form. You're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Now, of course, there will be days you're out of your office, away from your desktop, but you still want to join live. And there will be days when you're busy. You can't join live, but you'll want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. True story. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, but we also archive each and every daily broadcast. Currently, there's over 2,900 daily episodes archived for your educational and viewing pleasure. Obviously, you're not going to watch them all, nor do you need to. But if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Like I said, you're not going to watch them all, but it's a great resource to have at your fingertips because it allows you to see how we've evolved over all these years, day by day by day. youtube.com/CFRN. All right, let's get into that daily devotional. Then we'll go to the numbers from around the world, then the news, and then the charts. And at the top of the hour, again, Michael will join us. The topic of the new devotional we're starting today, it's actually a question. Where are you, God? It's a question we've all asked more than once, depending upon how old you are. We know that on day one, also called creation, God speaks the universe into being. What does it sound like when God speaks? The first words ever recorded give us the answer, and they changed everything. So be careful what you say. God's word is for everyone, everywhere. From speaking the entire universe into being to bringing new life to those in darkness, every word from the Father has tremendous power to transform. In Genesis 1, verses 1 through 2, we read, "In the beginning, God created the heavens and the earth. Now the earth was formless and empty. Darkness was over the surface of the deep, and the Spirit of God was hovering over the waters." Picture that scene. Emptiness stretching in all directions. Silence enveloping everything. Nothing but darkness. Then came the first word, the moment that started it all in Genesis 1:3. God said, "Let there be light." and there was light. The voice of God spoke the universe into being. At the sound of his voice, brilliant light broke forth. And from that moment, all creation has reverberated with the life-giving power of his word. John's gospel reveals a stunning truth. This is John 1, chapter 1, verse 3. In the beginning was the Word, and the Word was with God, and the Word was God. Through him all things were made. Without him, nothing was made that has been made. Jesus, the eternal Word, was present at creation's first moment. God's plan of salvation had already begun. As light spread across the waters on day one, before Adam took his first breath, God already knew every soul who would struggle in darkness, hungering for life. He knew every language that would ever be spoken and every tribe that would walk on the soil he created by simply speaking. The same word that brought light from darkness is still at work. Nations around the world are hearing God's word in languages they think and dream in. People are picking up the Bible in their native tongue for the first time, reading those Genesis words. In the beginning, God created the heavens and the earth. Let's talk about your beginning. The God who spoke galaxies into existence wants to speak new life into your story. His word still has the power to bring light into any darkness you're facing. The voice that started everything is still speaking today. Take a moment to ask the God of all creation to speak to you. And listen with your heart. Let's pray. Heavenly Father, in the beginning you spoke light into the darkness. Father, we ask today that you would speak your light into our lives, into every uncertain place and every shadow. We pray, God, that you would bring order, hope, and new beginnings by your word. Let your light shine in us and through us. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And happy Friday. Everybody's been working for the weekend, and now it's here. We had a short week, so Friday got here a little quicker, didn't it? Okay, let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow down 71 points. The NASDAQ up 104. S&P 500 up 12. Make that 9. And the Russell 2000, it's down less than a point. We had a lot of high impact news this morning, not the least of which the Supreme Court chose to stab the American people in the back. This will be in the history books for, well, no, I take that back because history is being rewritten. It probably won't be in the history books. But you remember today, February the 20th, 2026. Now, the market initially reacted positively, okay? Remember, it's the institutional traders that move price. Dead cat bounce. Well, some are saying, oh, hip hip hooray. It's a brand new day. No, I'm telling you, friend, it's a very, very dark day. Now I'll share some news on this topic in a few minutes as we get to that part of the program. But the mistake made today by SCOTUS will forever change the course of our country and your lives. The first day I ever broadcast on CFRN, this was back in April of 2005. On that first day, I said, you better start teaching your children how to speak Mandarin. And here I am, 21 years later, and I'm saying the same thing. Let's move on, I guess. In the commodity basket, crude oil is down 7 cents, trading 66.36 last. Gold up $93.30, trading $5,091.50 last, a gain of almost 2%. Silver up $5 and a nickel, trading $82.69 last. Oh, Trump will be speaking at 12:45 p.m. Eastern on the tariff ruling, so that's going to be in about 30 minutes. So we'll see what sort of volatility that brings to the market. As I was saying, silver up $5.06, trading $82.70 last. That is a gain of 6.5%. In the Asian markets at the close, the Nikkei fell 642 points, well over 1%. Shanghai dropped 51, that's over 1.25%. The Hang Seng fell 292 points, well over 1%, or just over 1%. And in the European markets at the close, FTSE gained 59 points. The DAX rose 217, which is pretty close to 1%. The CAC gained 116, which is almost 1.5%. So we had a red day in Asia. It was a green day for the UK. And at the moment, it is a mixed Radio Friday here in the US of A. And when we get to the charts, you'll clearly see, as soon as we hit the daily chart of the S&P, why the market maxed out, where it maxed out. And we'll talk about that in more detail. Turning to the news, the UK's Andrew Mountbatten Windsor, as we know, was arrested yesterday in Norfolk on suspicion of misconduct in public office. The 66-year-old former prince was later released under investigation, meaning he has neither been charged formally nor cleared. The arrest stemmed from claims that Andrew shared confidential government information with Jeffrey Epstein while serving as the UK's Special Representative for International Trade and Investment from 2001 to 2011. A newly unsealed U.S. Department of Justice email allegedly shows him forwarding sensitive trade material to the convicted sex offender. The investigation is separate from allegations made by Virginia Giuffre, who accused Andrew of abusing her at 17 years old, and who also died by suicide last year. King Charles III said the law must take its course and pledged to continue serving the public. Folks, this could be the unwinding of the monarchy as we know it. Misconduct in public office in the UK carries a maximum life sentence under UK law. No senior royal has faced such a criminal process since King Charles I, who was arrested and executed in 1649. President Trump's Board of Peace held its inaugural meeting yesterday in Washington, D.C. The body is made up of more than 20 countries planning to oversee the reconstruction of Gaza, among other efforts. The U.S. and 9 other countries will contribute $17 billion to the board and its Gaza relief plan. Now, 5 countries will contribute troops to a stabilization force, including 20,000 soldiers and 12,000 police officers. Trump has said he hopes the board will work to solve other conflicts, suggesting it could oversee the United Nations because, as we know, they can't even get out of their own way and have ever failed to bring peace anywhere. Separately, Trump said in a decision on whether to attack Iran will come within the next 10 to 15 days. The U.S. has built up the most air power in the Middle East since the 2003 Iraq War. There are rumors that Trump is going to give them a little taste of what's to come, possibly over the weekend, but he won't bring out the big guns, according to his statement, for 10 to 15 days. However, any comments or actions taken between now and then by Tehran, well, that strike could come sooner than later. I suspect most everyone in Iran who has a way out is trying to get out, because the future does not look bright. As I've mentioned, the U.S. Supreme Court scrambled the trade landscape today with a decision striking down the centerpiece of President Trump's second-term tariff program. The 6-3 ruling in Learning Resources v. Trump appears set to immediately halt a massive section of Trump's tariffs announced last year on Liberation Day, using a 1977 law called the International Emergency Economic Powers Act. The law gives the president the ability to declare an economic emergency and take action, but doesn't specify tariffs as a remedy. So, here we go back to America footing the bill for everybody, and the rest of the world getting a free ride. I don't know how they will sleep tonight. May God forgive them. U.S. stocks rose today after the Supreme Court ruled that President Trump's most sweeping Liberation Day tariffs are unlawful, saying he lacked the authority to impose them using emergency powers. Well, we've seen during this presidency just how limited presidential powers are. I mean, any backwater liberal judge can strike down any executive order. People in robes that were never voted into office by the people, for the people, have more power than the president. Have you really given that thought? And why we've never seen this in the past? You can answer that question. Stocks reverse course on the heels of the decision, having slid at the open as investors digested key economic readings and kept an eye out for U.S.-Iran tensions and private credit jitters. In its decision on Friday morning, the Supreme Court ruled Trump overstepped his powers. Well, God bless America. From Bloomberg, for years, loading up on the biggest U.S. technology stocks delivered a steady stream of riches, and avoiding them was a surefire ticket to the unemployment rolls. In 2026, the opposite has been true. Mutual fund managers who cut exposure to the volatile tech stocks that have roiled markets this year have been on a tear. Nearly 60% of large cap mutual funds are outperforming their benchmarks, the highest share since 2007, according to data from Goldman Sachs. Large cap core and growth managers have posted the strongest gains, helped in part by weak returns from big tech. The S&P 500 index has been virtually flat 7 weeks into the year, but beneath the surface there has been a reordering of winners and losers. Tech companies in the index are down more than 4%, while energy and materials producers have rallied at least 15%. Producers of household necessities have jumped 13%, along with industrial companies, while financial firms have slipped with makers of non-essential consumer goods. Now, this disruption has not been caused by artificial intelligence, although that's what you're going to read. And everything I just said, because of what SCOTUS did today, that's all about to change. So, get on board, I guess, or get out of the way. President Trump, of course, still has options to keep taxing imports aggressively, even after the Supreme Court struck down the tariffs he imposed last year on nearly every country on earth. The justices didn't buy the president's sweeping claims of authority to impose tariffs as he sees fit, but Trump can reuse tariff powers he deployed in his first term and can reach for others, including ones that date back to the Great Depression. It's hard to see any pathway here where tariffs end, according to Georgetown trade law professor Kathleen Clausen. I am pretty convinced he could rebuild the tariff landscape he has now using other authorities. Don't count the man out, but hold the culprits responsible. From Bloomberg, oil held near a 6-month high after President Trump said he's mulling a limited military strike on the mullahs. See what I did there? As forces gather in the Middle East, warning to Tehran they've got 15 days at the most to reach a deal over their nuclear program. Now, if they come out with some stupid statement over the weekend, like 10 days, 15 days, we don't care, we ain't making a deal. Well, guess what? That 10 to 15 day window goes away. So, I know a lot of people like to unplug over the weekend, but you might want to keep an eye on the news this weekend. Not forecasting that there will be a strike, but I'm certainly not ruling out the possibility, because it's real. For decades, judicial education has served a narrow but vital purpose: helping judges understand complex technical issues without telling them how to rule. That boundary matters. Once judicial education becomes advocacy, courts stop acting as neutral arbiters and begin functioning as instruments of policy enforcement. The Federal Judicial Center has crossed that line. In endorsing the fourth edition of the Reference Manual on Scientific Evidence, produced by the National Academies of Sciences, Engineering, and Medicine, the taxpayer-funded center embedded contested, plaintiff-driven climate litigation and theories into one of the most authoritative reference works relied upon by judges nationwide. The result was not neutral guidance on scientific method. It was an evidentiary framework that tracked the legal strategy of climate plaintiffs. The reference manual is not a blog post. Judges rely on it when evaluating expert testimony, determining admissibility, and weighing causation in complex cases. Historically, it focused on methodology, how science works, what courts should ask, and where uncertainty lies. This fourth edition marks a sharp departure. For the first time, the manual included a reference guide on climate science. That guide, now described by the Federal Judicial Center as omitted, treated disputed theories central to active climate litigation as effectively settled. It instructed judges that researchers can quantify the contribution of human emissions to specific damages and suggested that skepticism of those claims may reflect misunderstanding or strategic manipulation. Do I even need to comment on that? And last on the news, last month over 6,000 public employees broke free from mandatory union fees, a record-setting surge that signals a nationwide shift in teacher and public worker empowerment. Leading the charge is the Teacher Freedom Alliance, which helps educators reclaim their paychecks from politically driven union agendas. This year, the group plans to help 60,000 workers leave unions and push legislation in multiple states to curb taxpayer funding for the unions. According to its website, the Teacher Freedom Alliance exists to assist educators in their mission to develop free, moral, and upright American citizens. When you and I know that all that's being taught in our schools, from pre-K to university and postgraduate levels, is socialism. Socialism. Go to any major university, especially the ones that, of course, are government funded, and still charge more than most people can afford to send their kids to college. Take a look at the list of teachers. Think you're going to find many conservatives on that list? No, they can't get hired because what they have to say doesn't matter. It's not important. And that's the world in which you and I live. at least for now. All right, Logic 247, that's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, silver, and gold. We're currently in week 393. Over the last 393 weeks, we've issued over 21,500 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based simply on market structure. A simple process we teach all of our passport holders. Now, Valerie did the recap this morning at 6:30 a.m. Eastern. So that was before we got the news at 8:30. That was before we got the Supreme Court ruling. Okay, so of course she will update the recap this afternoon or evening and finalize it for the week. But at the time she did the recap, here's where we stood. Since the markets opened Monday night at 6 p.m. Eastern, remember Monday was a holiday, so we normally start Sunday night at 6 p.m. Eastern. But when Monday's a holiday, we start Monday night at 6 p.m. Eastern. This week, we've issued a total of 40 logic alerts. At the time Valerie did the recap, we were waiting on the outcome of 11. I suspect the volatility we saw this morning may have resolved a few of those. We'll find out when she redoes the recap this afternoon, finalizes it. That gave us 29 actionable alerts, of which 2 or 7% would have been stopped out, again based simply on market structure, the simple process we teach all of our passport holders. Now, the purpose of the logic alerts is to help you learn how to read a chart. Charts have no words, so it's a different language, a nonverbal language. You've got to learn to read it like a newspaper. But there's no words. Exactly. If you don't know where to anticipate potential support and also potential resistance, it's going to be very challenging for you to learn to trade over the long haul. Plain and simple. If you never actually trade a logic alert, use them to learn how to read the chart. If you show up and do the work within a couple weeks, you won't even need the logic alerts because you'll be able to read the chart yourself. You'll instinctively know where to expect potential resistance, where to expect potential support. And of course, in doing so, you unveil the windows of opportunity that lie between those important points. And that's where you find your best high probability, low risk trade opportunities. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. So, good week so far. We'll see what happens this afternoon when Valerie finalizes the recap for the week. Now, 393 weeks, that's a very long time, over 7 years. But quite a few years before we introduced Logic 247, we had our original alert service, the concierge trade alerts. They are different. In fact, they're different in a lot of different ways. But for the purpose of this discussion, I'll just cover one thing that makes them different. They don't come out around the clock. They're posted as a static report, typically 5 minutes ahead of the Globex open each evening. The Friday session that we're in right now began last night at 6 p.m. Eastern. 5 minutes before the market opened, all of our traders and trial members had all of these targets: the S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So as we go through the individual markets and look at the individual charts, you'll see these targets drawn out on the chart. Just remember, all of our traders had that information 5 minutes before the market opened. So now we can go to the chart, and we'll start where we always do with the bellwether, the S&P 500 E-mini futures. We were stuck up here at the daily BBC. Now we did reach up and tag that 38% fib extension. We now have this double top going on there. We're well off the high of the day. I pray you did not get sucked into that head fake rally this morning. I mean, come on. But obviously the institutional traders, the ones who move price, they know how naive most retail traders are. So anyway, this is the world in which we live and the markets in which we trade. So we can whine about it, or we can trade what's in front of us. And that's what we've done since 2005, and that's, I guess, what we'll continue to do. I did talk about changing the fib extensions. I haven't officially changed them yet. I'm not going to take the time today because we're running out of time. But when I change them, we're going to go from this low to the all-time historic high to this retracement low right here. But as you can see, my reluctance in changing them at the moment is the 38 has been so valuable, okay? And the 24. I mean, look at that. To me, that's art over science. It's actually science, but to me, it's art. So think of it what you will. I'm sure at some point next week, maybe Monday, I'll go ahead and change them here. I typically wait for price to hit the 100% fib extension, but I fear we might be waiting a very long time for that to happen. So we'll go ahead and we'll get them moved next week. Now, price always reverts to the mean. No matter what type of trading you do, that's just, it's like gravity. Price, it's a law that exists. There's nothing you can do about it. You can deny it, but stay away from the edge of a tall building, right? Price always reverts to the mean. In our case, the mean is green. This green line right here. We call it the BBC. It stands for Bull Bear Cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Higher prices, lower prices, higher prices. It's pretty simple. Where have we been all week? Below the BBC. I got some bottom feeders coming here trying to nibble this thing back up. Be careful. Please be careful. As you can see, red and falling has gotten beneath price. So it's right at the 24% fib extension. So that's potential support times 2. Could we rally into the close? Anything can happen. Don't ever forget, if you don't learn anything else, learn this. Anything can happen. You gotta embrace all possibilities and prepare for, like with price, price is either going to go up or it's going to go down. Yeah, I know it can go sideways for a little bit, but ultimately, what's it going to do? It's going to go up, it's going to go down. So what you do is you build a strategy for both sides of the equation. Then all you got to do is wait for price to make its move, and your plan's already in place. No last minute decision, no snap judgment. Plan it out, and then whichever way because you have no control over which way the market's going to go. How many times have you been aggravated and frustrated because you just knew the market had to go up from here, and then it didn't? Or it had to fall from here, and it didn't. Get out of that mindset. Keep your headset, but get out of the mindset. Plan for both sides of the equation, and then just trade it as it drops into your lap. Okay. The logic alerts are created on the 30-minute chart, as are the CTAs, the concierge trade alerts. As I said, you would see these drawn out on the charts, and there they are. Now, the vertical line separates day Friday, here's Thursday, back here's Wednesday. Now, when price rallies up to a weekly trading zone, we expect resistance until proven otherwise. When price drops to a weekly trading zone, we expect support until proven otherwise. The weekly trading zones are published every Monday morning at 6:15 a.m. Eastern. When Monday's a holiday, they come out Tuesday morning at 6:15 a.m. Eastern, as was the case this week. However, once the weekly zones are published, they're carved in stone for the entire week. That's how it's been now for over 16 years. Once published, they do not change in any way whatsoever. So, nice resistance yesterday, beautiful support. All of our traders had that information Tuesday morning, 6:15 a.m. Eastern. This was the opening candle last night. Remember, these were published 5 minutes before the market opened last night. This was the opening candle of the Friday session for the ES. Now, when price encounters a weekly trading zone, only one of three things can happen. 70% of the times, consolidation. That's this. 20% of the time, it's rejection. 10% of the time, the slice. We opened here above the BBC. That means we expect higher prices, right? So up we go like a magnet to the weekly trading zone. We got there, or I'm sorry, to the weekly trading zone at 68.88. The opening price last night was 68, we'll just call it 75. 13 points up to the zone. You only need 2 points to get your goal for the day. After that consolidation, which happens 70% of the time. Now, let me point out again yesterday. The high yesterday was based off the bearish cross that was created earlier in the session. When the red line gets below the green line and leads to an extended move, the first time price revisits that area will almost always be good resistance. That looks like pretty good resistance. So back to today, after the consolidation, we made a run at the zone. Okay, we hit some resistance right here. Not an area I would have specifically called for resistance, but you got to trade what's in front of you. Okay. Resistance will always send the market looking for support. Right here you have support times 2. This zone is 68.88/89, and you have the BBC. Remember, the pullback to the BBC holds more often than not, but eventually it will trade through, as you can see. We hit the long target. No, let's see. Did we miss it by a tick? I think we did. Yeah, 69.04 3/4. Okay. When the market finds resistance, it's going to go look for support. Where did it ultimately find it? First, at the weekly trading zone below. That's quite a bounce. Even continued higher until it ran into resistance at the black step line, which sent it down to the short target. Okay. Now the short target, it's just based on market structure. To the tick. To the tick. Now, once the market found support, here's the Wall Street Open, which sent us higher. And then we continued higher during the 10 o'clock 30-minute candle. And then we lost about half of that. Potentially, this is the high of the day. Now, I want you to look at the horizontal line on my cursor. Remember, this is Friday, this is Wednesday. This is Thursday. This is Wednesday. You see that high right there on Wednesday? You see this high right here? That, my friend, is market structure. You would do well to understand it, okay? So the market finds resistance. It's got to go look for support. It's just how the market works. Pull back to the BBC and the zone held. Okay, yes, we spiked the BBC and the zone, but as long as a candle is touching it, that's a hold. And now we're right back up to the CTA long target at 69.05. Trying to push through, but you've got a high, a lower high, and a lower high. If the market continues to move higher, keep those in mind, okay? The Dow, here's where we opened last night. Up we go to the weekly trading zone, published Tuesday morning at 6:15 a.m. Eastern. And we consolidated for quite a few hours. Remember, these are 30-minute candles. And then right here, we got a leg, a retracement, pull back held, down we go to the short target. We spiked the short target, which was simply based off this low, and we hit the zone to the tick. The zone's 220/225. Support, of course, will send the market looking for resistance. And we found it right here. See these highs from yesterday? Right there. Look at the horizontal line on the cursor. It's right there. Now remember, these were based off this. It's all connected. Resistance sends the market looking for support. And as you can see on this one, we hit the CTA short target pretty much to the tick. The low of that candle was $49,265. Okay, So we missed it by 5 ticks. Support sends the market looking for resistance, which it found at the BBC. So far, the pullback is held. Now, we've spiked it a little bit, but here we sit. High, lower highs, and at the moment a lower high. Okay? Just be careful on the upside. Not saying the market can't go higher. Just encouraging you to be careful. Okay? On the Russell. Yesterday, this zone held as good support most of the session. We did take a little rally into the afternoon session. This was the opening candle last night at 6 p.m. Eastern. And up we go to the weekly trading zone, published Tuesday morning. Resistance. Resistance does what? Sends the market looking for support, which it found at the weekly zone. Gave us a bounce, and then we reached down and touched the short target based off that low right there. We now effectively have a double bottom in that area, but after hitting support, the market's got to go find resistance. So it hit the long target and it shot through the long target. And we even spiked this high from Wednesday. But look where we ended up closing. Well below the weekly zone. So we consolidate for a bit along the BBC. Then we reach down and what's the low here? Okay, so we missed the short target by a half a point. Okay, so now we're bouncing back up to the BBC. Remember, the pullback holds more often than it doesn't. Okay. This pullback and every pullback has held because every one of these candles is touching the BBC. Again, not saying the markets can't go higher. I have no control over what the markets do, nor do you, nor does anyone else. So don't fall for that whole holy grail nonsense. The NQ, here's where we opened last night. We got a leg and a retracement, pullback held. We got a leg that took us right up to the long target, basically to the tick. Resistance sends us back to support at the BBC. Support at the BBC sends us to resistance at the weekly trading zone. Resistance sends the market looking for support, which it found at the weekly trading zone. We bounce up into red and falling, and that sends us right down to the short target. Now, if you scroll left, you'll see why buyers came in here based on market structure. And from the short target at 130-minute candle, we made it all the way back to the long target, or almost to it. 57.5. So on the NQ, 2.5 points is, not much, but it is what it is. So, all right, Michael's here. So he'll give us a recap of what happened in the live training room this morning. Do a little live trading as time and the markets permit. When he's finished, I'll come back. I'll complete the recap that we were on and wrap things up for the week with our good word for the day.
Excellent. Here we are.
All right, looks good. Yeah, go ahead.
Audio working, all that?
Yep,
good.
It's fine.
Okay. All right. I believe James and I got almost all the things done that he wanted to get done. So that's good too. All right, here we go. Good Afternoon, everyone. Today is Friday, the 20th day of February, 2026. Now, if you have not taken a free trial with us and you want to, go ahead to mytradingq.com, click on the purple button right here. There is no credit card required for this trial. Click on that purple button and it will bring you to, this registration page. Right, on this page, all that we ask for is your name, your email, and your phone number. Down at the bottom, make sure you give us a TradingQ login ID. Okay, when you give us that, we will be able to get your indicators indicating on your desktop. That is where you want to be when you take the trial with us. You want to have your indicators indicating on your desktop at the beginning of the trial so you can follow along. Okay. Today, we had a pretty good day today. Our second best day of the month. I think it was. Yeah, our second best day of the month. We needed it after the last couple of days. And today we were double more than the last couple of days combined, I think. Pretty close. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures at the bottom. Today is the 20th day of February. As I said, we're up 155 ticks on the NQ, 72 on the Russell, 40 on the YN, 44 on the ES, up to $1,885 a contract on the morning session. Today it took 2 minutes and 2 trades to $2,350 with 10 contracts on, or 235 with just one, and we took a total of 54 trades today. So we took a bunch of trades with 7 stop outs. So 87% of our trades are break even and better. Now, this formula down here, which was, it's an average of the averages. That formula was off today, and it has been off for a couple of months. Since I started doing it, it has been off. Well, the first one that I did back here, that was correct. And every one after that, it skipped the first 3 lines, and it had the total. I mean, it did the average of everything underneath it correctly, but it didn't include the first 3 lines. So now they all include the first 3 lines. So 85.5% that month, 84.6% that month, 85.03% that month, and so far this month, 85. I think that's this month, isn't it? Yeah, 85.25. So we're averaging about 85% of our trades are break even or better. Okay. So far in the month, we're at $16,465 over 14 trading days, averaging $1,176. And on the year, we're now at $39,490 over 32 trading days, averaging $1,234. It's funny, I was just thinking I love symmetry in numbers, and I saw that 1, 2, 3, 4. And then this at one point today was exactly 38,000. Anyway, I'm a nerd. So far this year for the 24/20 blueprint, if you quit trading when you hit the goal for the day and you add 1 contract per month, 1 contract per month, that means you have to earn $2,000 per contract per month to be able to add that second one. It usually works out to that. If you're consistently profitable, you get your goal of $100 per contract per day. Then it usually works out that way. Okay. So if you were to do that, you'd be on your second contract right now. And if you did everything exactly like I did in the room, you'd be up $7,087. Okay, $7,087. And you would have worked so far on the year just under 3 hours, averaging $2,375 per hour. Okay. And that's where we stand. Hang on. And that's where we stand on the day, on the month, and on the year so far. Okay. So let's get into the trades that we took. No, we didn't end. The only thing we didn't end at the high of the day on, I believe, was the ES. So the Russell, let's start out with that guy. Control and back on that one. And go back to the beginning. We had, a fair number of trades on everything. And scrolling all the way back. It's got to catch up. There we go. Here we are. All right. Let's get here. On the Russell, our very first trade on the Russell was, I believe it was 1 tick. And then the next trade over here was 10 ticks, or 12 ticks. That got us to 13. Okay, and I have that is that color arrow because the midpoint wasn't flat when I took that trade, and we hadn't made it full cycle over here, so that wasn't really a valid trade. But I got whatever I got on that, 12 ticks on that, brings us to 13. The next one was 10 to get us to 23, then 2 to get us to 25. Then news came out, and we had a lot of news today, a ton of news today. Right, so after the news came out, apparently we waited a few minutes here before we traded again. And here it is. So we'd gone from 23 to 41. 23 to 41. And then we had a big trade. Somewhere here we had a big trade. We went from 41 to 73. Okay. And then somewhere in here, I think that was the one. We went from 41 to 73. Something like that. And then we stopped out from 73. Let me just do this. This is the Russell. Okay, sorry, I blew it. The Russell. I was reading off the the YM stuff. So on the Russell, we went from 36 to 43, from 43 to 45, and from 45 to 35. So right here, we went back down to 35. Okay. And then from 35 there, we went to 40, then to 52. Then from 52, we went to 54. Then we got something else and something else and something else that I didn't count. And at the end, we went, I'm looking at the ES now. What the heck? Let me start this over. I messed this all up. So let's see. Let's start this over. We'll go back here. All right. So on the Russell, we went from 1 to 13 to 23 to 35. I think that's here. We went to 35. Then from 35, we went to 47. Then to 48. Then to 49. Then to 64. So this is where we get to 64. And then we stopped out, went from 64 down to 49 again. And then we went here, all of these. 49 went to 53, then 56, then 66 and 67, and then 3 one-take trades. 70, 71, 72, and that was it. All right, and that was it for the Russell. So let's go to the very end and see if we have any trades right now. We actually do not have a trade right now, but if this hits the mid-band and closes up, it will be a trade on the Russell right now. Okay, that was our day on the Russell. The YM's got a similar trade to the Russell right now because it has hit the mid-band right here. If you get an up close on that, it'll be a trade. If you get an up close on that, it'll be a trade. Okay. The ES didn't hit the mid-band. The Russell just gave its up close. The YM just gave its up close. So they both just gave trades here. Here's the Russell one. Here's the YM one. Okay. Put that on top. I'll put that on top. Now, if I go just down to 2 right here, like this. Okay, we stopped out on the Russell and we stopped out on the YM. We stopped out on both of those. Okay, I'll have to put those in a second here. Right, starting to do that. Let's go back to 4. And then put in both of those stop outs too. Before I forget, we have here on the Russell minus 15, and on the YM minus 15. Okay, today is 2:20. This is 50. This is 2. Carry this down. Copy. Paste. Carry that down. Bump this to 50. All right. So all of that stuff is correct right now. We're minus $1,500 right now, but we'll get it back. I'm not worried about it. All right. So we're talking about the YM. Let's go here and look at the YM today. What did we do with the YM? Scroll all the way back to the beginning again. All the way back to the beginning again. Getting there. I'm curious if the market's going to pop right here after stopping us out on both the YM and the Russell right there. Let my computer catch up. It hasn't had to do that in a long time because I haven't rebooted in a while. All right. So here we are with the YM, and I think they are starting to get back to a rebound here. Right, our first trade on the YM was right here. We picked up 6 ticks on that one. Then one more there to get us to 7. Then we stopped out, put us at minus 8. the news came out. And we went from -8 to +2, so we had a 10-tick trade there. Then to 3 and 4, and then 17 and 33 and 35, and there's one more in there. We went to 40, and that was what we ended up with on the YM today. We ended up with +40. Okay, +40 on the YM. All right, so everything is in the red right now. We don't have any trades right at the moment anywhere, but we're about to set up on everything. So I'm gonna keep it like this for right now. On the ES today, we ended up with a -44. So 40 was the high of the day on the YM. And the NQ, we didn't get to that one yet. But the Russell 72 was the high of the day on the Russell also. Okay, go back to the beginning here on the CS. I'm just keeping the other ones up so I can trade if we get the opportunity. Because with those two stop outs, we're going to need as many chances as we can get. All right, so here we are on the ES. Our first trade was a break even. Then our next trade oh, we have two of them right there. On the ES, the next trade was a +8. Then we had a +4 to get us to 12. That's not a trade here. It came out of the overbought on the wrong place. Okay. Could get something here on the NQ. We could get something here on the Russell, but the YM's not going to give us anything right now. It's going to go full cycle down. All right, so at that point on the S, we're at +12. And then we had a big trade on the S. The next one was a big trade on the S. Let's Control Alt down here so we can actually see it. All right, so neither one of those other markets gave us a trade either. We had a break even, then right there we had a 30-tick trade right there, I think, because we went on the ES from 8 to 12 to 42. That was a 30-tick trade, and then we stopped out. We had a break even, and then we stopped out. Oh, we had some slippage on that one, and we went from 42 down to 32. So we had to stop out somewhere in there. This was the stop out right here. Now that's orange because I think my stop should have gone to break even or something. I don't know. But neither one of these other ones gave us a trade yet. So we went from 32 there to 36 to 43. Just slide along here. From 43 went to 45, and then we stopped out again to 35. And then we went to 40, then to 52, and then to 54. And our last trade on the ES was a stop out. Well, unless that one was a 44, brought us down to 44. And then I guess the last two trades were break evens. And that was it on the ES. Okay. We didn't end up with any trades through here while that was all happening. Not even on the ES. All right, so now we have the NQ as our last market right now. And let's just blow it up here like this. Okay. We'll go back, all the way back to the break even on that. We did not have the most trades. We had the most trades on the ES, oddly. The NQ didn't have that many trades. Comparatively, it normally has the most trades, but today was an exception. We started out on the NQ. Well, the first trade was a 47, and the next trade was something more to get us to 79. We had those right at the beginning. And I think this first trade is where we got the goal for the day. So we're at 79 after those two, and then we went 10 ticks to 89. Then this was a slippage loss, went from 89 down to 83. And then we had a stop out somewhere in here. That was a break even. Then right here we had a stop out, went from 83 down to 47. and 47 to 88, and then 88 to 52, and then 52 to 62, 62 to 71, 71 to 81, and this was the end of it. 71 to 81, 81 to 91, 91 to 101, and then we had a big trade. We went from 101 to 155. I know it's pointed that one, but I don't think it was right there. I went to 155 at the very end. We had a big trade at the end. It slipped us positive. A down close right here on the NQ would be a short. Okay, let's pop this back here so we can see everything else. And the down close on the YM is a short. A down close over here on the Russell right now would be a short, and a down close on the S is not. Okay, so I just took all of them. Here's the YM. We're going to lock in some profit on that. Here's the NQ. I'm going to lock in. That was, I don't know what that was. The YM, we're going to lock in 10. Oops, that's 9. 10. 10 on the YM, at least 10 on the NQ. And the Russell hasn't gone to break even yet. Here's the Russell. The stock just went to +1 on the Russell. It's 2 on the Russell. Okay. All right. So let's go see what we got out of all that. I know we got 2 on the Russell, so that brings that to -13. 10 on the YM, that brings it to -5. And I don't know what we got in the NQ, but it should bring us back to pretty much break even, I think. Let's go see what it says. It says on the NQ. We had 4.16 ticks on the NQ, is what it is. I'll show you. There it is. Okay, so that becomes a 16. And that, oops, this becomes a 16. And that gets us almost back to where we need to be. That becomes a 5. And the number of minutes we have left, we only have 12 minutes left. Wish we had more, but we're almost back to positive right now. So we'll have some more trades in there. Now, if you have not taken a free trial with us, let's get you ready for that in just a second. We have trades here just about ready to trigger. I'm going to get ready again on the YM. The YM is a trade. The Russell is not a trade. The YM is a trade. The ES is not. The NQ is not. Okay, so the YM is the only one that's actually a trade, and here it is. And that stop just went to break even. Lock in 2. And we're out with 2 on the way. Okay, these didn't get into the overbought before they came out of the over. Before they came off the mid band. Okay, so let's go back here and we'll put this at, this is the YM. Oh, this is the YM. And this becomes a 6. All right, back in here. So if you haven't taken a free trial with us and you want to take a free trial with us, ES is just about to have a trade here. If you haven't taken a free trial and you want to take a free trial, go to DS didn't give us a trade. Nothing did. They're all going to flip to YBR. I think the Russell's pretty close to giving a short, but I really don't want it to. These aren't going to be trades. That's not going to be a trade. That's not going to be a trade. That's not going to be a trade. This could be a trade. Yes, it could be a trade. That's the only one. And there it is. And it's starting to run. And here it is. That's 20 right there. I believe that brings us to break even. Yeah, I was telling you this. If you haven't taken a free trial with us, if you're just coming in on YouTube and haven't taken a free trial, go here to mytradingq.com. Click on the purple button. There's no credit card required for the trial. When you click on that, it's going to bring you to this page where all that we ask for is your name, your email, and your phone number. And down at the bottom, make sure you use your TradingView login ID. Okay. So in here, we just got, that was the Russell, 20. So that brings us to 7. And this goes to a 7. Okay, so we are positive now. And 71% of our trades so far are break even or better. You know, up close, and then a down close on the YM will give us a trade, and up close and then a down close on the ES off the mid band would do it. Same thing with the NQ. You have to hit the mid band. This one, an up close and a down close will do it. These have to have an up close that then has a mid band hit on the next bar. This needs 2 up closes. There's 1. Now the YM just needs a down close right here. And there's the YM down close. That's not working out so good so far, but here it is. And there it goes. All right, we're going to lock in. That's 12 on the YM. All right, that was a quick move on the YM. None of the other ones actually triggered. Okay, so it's 12 more on the YM right there. Now, the mid band is not flat, so that's not a trade. Okay, so it's 12 more on the YM. What's this guy right? That brings us to 9 on the YM and 8 trades. Okay, and we have 8 minutes left. We're up $1,600 or $160 a contract, which is the equivalent of the goal for the day. Let me slide this over so you can see a little bit more of the NQ here. So when I say things like, I mean, yes, trade, I'm not going to count this, but I'm just going to go for break even on it. Start locking in some profit. I'm just going to get out. Okay, the S down close would have been a trade there on the S. That I think it's too far away there on the Russell. All the other ones are going up to hit the YBR. And the Russell does too. Right, so this is pretty active trading. You know, we only had 12 minutes and we've already got 12 trades. Does anybody have any questions about all the stuff that I'm doing? I mean, you see everything happening, right? Do you understand why I'm looking for the trades that I'm looking for? I'm looking for everything to pull back 50%. All right, and then I'm looking for it to find support and or resistance at the 50% level. When it gets to the 50% level, the trigger should be either overbought or oversold when it gets to the 50% level. Okay, that's what I'm looking for. Over and over and over again. See, this one's broken. This one could still work. This one could still work. But this didn't flip the YBR. This didn't flip the YBR. So they're kind of messed up. They're going to have a 50% retracement with this leg up and then go up. The YM could be a trade on an up close. The ES needs to hit the mid band. YM could still be a trade on an up close. The ES can be now. Right? The YM, I'm in. Here's the YM. That was 2. And the ES could have still been a trade if I had time to put the order on. Since those 2 more on the YM. This guy. 11 there. I thought we had 12 trades. We don't. We only have 9 trades. Well, markets are all over the place. So what I want to kind of check and see here is where we are right now on the day. Go out here. Okay, we're still above this trend line on the day. We're still below the BBC, but we're above this trend line on the day. I'm hoping we close at the top of this bar and above the BBC, which is that level right there by the end of the session. Okay, that's what I'm hoping for. We'll see. But you guys might remember when I went over that yesterday, where I drew those trend lines in there yesterday. And I said, I'm afraid we're going to get caught up in between those trend lines yesterday. And we actually ended the day right in the middle of them. Yesterday I was saying, I'm afraid we're going to get caught up in between these 2 trend lines that I drew. And I'm afraid. And so we ended right there. And then we opened just a little lower than the close. And now it's trying to stay above this trend line right now. That would be a good thing if it did, but it's got to get up above the BBC right here. Get above the BBC and give us an opportunity next week. Okay, we'll see what happens over the weekend. I'm sure Dwayne went over the whole, the SCOTUS and Iran and all that stuff that we got going on this weekend. So you really want to be careful this weekend. Really want to be careful this weekend with your trading. Well, not that you will trade this weekend, but if you trade crypto, you could trade this weekend. But if you put any trades on now, they're going to hold over the weekend. You want to make sure you have limited risk on every trade you take. Need an up close on the Russell. Goes on the Russell will be a trade. It is, and the YM didn't quite make it. The ES didn't quite make it, but the Russell stop is at +1 right now. +10, and we're out with 10. Oops. I'm going to put arrows on that because I come in here and do it. The Russell 17, this 10. Times 26. We still have a few minutes left in here, but we're up to 80% now from 0% after the first two trades. All right, everybody with me so far? This is not a trade on the Russell because we didn't come out of the oversold, but this could be a trade here right now on the Russell. It's kind of ugly the way it's coming together. I don't really like it when it does that, but it could be a trade on the up close still. I think it can't get below below 0.1. Excuse me. Okay, if it goes down any or closes down, it's not going to be a trade. It's not a trade. And nothing across these three. Okay, now we need a down close. A down close over here on the Russell. Be a short. I'm sorry, that's wrong. Cancel. I'm sorry, it's just, I'm looking at the price action. I asked you to actually go to the price action. Just too bad I didn't put that on. This was a 50% retracement of this leg down. That's what I was looking at. I wasn't looking at the colors. If I was looking at the colors, then I would have been right. And if I wasn't looking at the colors, then I would have been right. But I was just looking at the price action. Okay, so now a down close on the Russell will be a short. Now it's too far away, I think. Oh, might not be. It's pretty close. No, it's not. It's going to be 3 ticks away. It's not going to be a trade. The NQ, however, I just noticed. Now, we had the gap right here on everything. We had the gap right away. And it filled the gap there. It filled the gap here. It hasn't filled the gap here yet. And it filled the gap here. All right. We now have a minute and a half left. This was not a trade here because it didn't come out of the overbought right there. Not a trade there. Not a trade there. Not a trade there because it wasn't off the mid-band. There was no trade through here, but this right here was actually a trade right there. It could still be in that, I guess. That was actually a trade right there. Okay. And everything's flipping bullish right now. All the YBRs just flip bullish. This one just hasn't painted yet. It still hasn't painted. What the heck? There it is. All right, the NQ is the one closest to a trade right now. It's an up close. I guess actually the YM and the ES both had it too. Okay. So did we get the up close on the NQ? Not yet. We did get it on the ES. Here that one is. I'm going to go +1 on that. We did get it on the YM. That's just going to +1. The YM, I'm going to go to plus, well, that's 6, 8. The ES, I'm going to go to plus whatever that was. And the NQ, I think I got 10 ticks. I had the NQ waiting. I don't know what I just got on that. Did I get 10 on the YM? I think I did. Let me just go check it out. It's time to wrap it up anyway. So let me just go check out what I got on those 3 trades. Here they are. The NQ, I only got 1 point on. The YM, I got 10. The ES, I got 1 tick. It seemed, didn't it seem like I got a lot more than that? Yeah, I'll show it to you. Let me just find my print screen thing. I'll show you all those trades. It seemed like I just got a lot more than that, didn't it? but the NQ, I'm sorry, that's the wrong NQ. This one right here, it was 67.25 to 68.25, so that was 1 point. The YM was 22 to 32, so that was 10. So that was 4 ticks, 10 ticks, and the ES, I got 1 tick. I thought the ES gave me a lot more than that. Let's go put it in. This is going to be 3 more, so that'll be 13 there. And on the ES, we got 1. And on the YM, we got 10. On the NQ, we got 4. So this is how we're going to wrap it up for this session, guys. We're up with 1 contract, $302. With 10 contracts, $3,025. Took 13 trades with 2 stop outs in 12 minutes. 13 trades with 2 stop outs in 12 minutes. Wow. So we ended up with $3,025 today. We're averaging now $159 per contract in the 14 minutes that we average trading in this session. So it's worth coming to this session every day. If you can't make the morning session, come to this session. It's all the same stuff. We're just doing it over and over and over again. And Dwayne's going to ask me this in just a minute, so I'll bring it down here. Today it took 2 minutes and 2 trades to get to 23.50 this morning with 10 contracts, at 235 with 1 contract. And if you've not taken a free trial with us, go here to mytradingiq.com and click on the purple button. No credit cards required. That's going to bring you to this registration page just to fill it out. Okay. And that's it. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. Dwayne, you are ready. You are right there.
I'm ready. I guess there's no reason for me to ask.
Yes, but you can still ask because it's what we do.
Okay, recap of the morning session.
Well, today it took 2 minutes and 2 trades to get to $2,350 with 10 contracts on.
Good job.
Thank you. See, I got to have the good job in the bill.
All right, buddy. Have a nice weekend.
You too. Be safe.
Okay.
And we'll see you all next week.
All right, guys, we left off with the NQ, where we hit the long target here, the short target here. We got above the long target here, and then the pullback, as you can see, to the weekly trading zone. That held, gave us a bounce. We're above the BBC. Price is trying to move higher. It's taking out this little double top, but this candle only has 3 minutes in it, okay? So there's still 27 minutes left in the life of this candle. The potential for it to close back below the BBC is certainly very real. So be conscious of that. And up here, you've got a high, a lower high, and a lower high. And at the moment, a lower high. So as I said, as we went through all the different markets, just be cautious on the upside. And if you missed any part of today's broadcast, you can, when I'm finished with the recap and the good word for the day, you can go to youtube.com/CFRN and you can watch today's broadcast in its entirety from start to finish, because we covered all the markets in granular fashion, except the 2 or the 3 we haven't got to yet. Now, we've rolled crude to the J contract, okay? Now, when I did the CTAs last night, it was still on the H, and then I realized, see, it's still trading, okay? But if I put a note in the discussion group last night, if you didn't roll forward, you need to roll forward to JCLJ 26. We are above the highest weekly trading zone. This is where we opened last night. Pull back to the BBC held. Look left, way left. Got to look way left to find out where this resistance came from. Then we got below the BBC, we got a leg and a retracement, the pullback held. A retracement, the pullback held, the pullback held. We finally closed above the BBC, and then we opened and closed above the BBC. Now, based on the last 16 years of history, there is a great potential that by close of business today at 5 p.m. Eastern, price of crude could be at or below the highest weekly trading zone. Now, over the last 16 plus years, we have had a couple of handfuls of weeks where price in the different markets has closed above the highest weekly zone or below the lowest weekly zone. And at the moment, it looks like the potential to close above the highest weekly zone could materialize today. But should there be a drop going into the close down to 65.60/65, don't be too terribly surprised, because that would be in keeping with 16 plus years of history. Okay. Next is gold. Here's where we opened last night. Got bumping our head up against that weekly trading zone at 50.20/21. And then right here, we hit the long target. This candle opened at 50.30.5. So basically it's a $1,200 candle up to the target, but it went higher. It went all the way to 48. So that would be another $500 per contract on top of that. The entire candle. Now this is one 30-minute candle at 1 a.m. Eastern. Opened at 50.30. Opened at 50.30 and ran up $1,860 per contract traded to its high. Then we get a pullback to the BBC. The pullback holds. So this is how price moves. Leg retracement, leg retracement, leg retracement, leg retracement, leg. And this is where we sit. The high of the session so far, 50.97.3. Why does that say 50.94? Hang on. What madness is this? See if I can get the high of this. Come on. 50.96.4. I'm sorry. I must have misquoted. The high of the day is 50.97.3 so far. This candle looks like it's trying to take it out. And then we've got a zone overhead, 51.15/51.16. See how the zone acted as resistance until we finally broke through. And then when we came back, it became support. When price moves up to a zone, we look for resistance until proven otherwise. And when price drops to a zone, we look for support until proven otherwise. This low right here, as you can see, is this low right here. And last but not least, here's where we opened on silver last night. We hit the short target by 22.30. Remember, you only need 2 pennies in silver to get your goal for the day. So from support, market's going to do what? Go look for resistance. We hit the long target, which was based off this high. And please note that this high yesterday was based off this right here, where blue turned to red. Do you see that? Okay, that's market structure. We made it through the long target and through the weekly zone. Leg or retracement, We had resistance at the zone that sent us all the way back to the BBC for support. But the pullback held because this was a red candle all the way down, but we closed the 30-minute period way back up here. Now we've gotten above this zone at 81.93/94. High of the session so far, 82.95. And it looks like we're currently trading 82.75. And one last look at the daily. We're back up again, pressing up against the BBC and that 38% fib extension. As we roll into the close, markets are trying to recover here. Like I said at the beginning, you got to embrace all possibilities. Okay, we've been below the BBC now for 1, 2, 3, 4, 5, 6, 7 days. There's the potential we could close above it. Okay, but what we need to go from bearish to bullish is we need a candle to open and close above the BBC. So closing above it, that would be the first stage, but the confirming stage would come when we have a candle open and close above the BBC. Okay, Sunday night, based upon anything that happens, I mean, there's so much geopolitical tension going on right now. And I'm sure Trump's not in a good mood. So he doesn't seem to be ruled by his emotions. He has a pretty steady hand on the helm. So we can't rule out any possible preemptive strikes, but he has officially given them a 10 to 15 day window. But there are rumors that he wants to give them a little taste of what's to come if they don't agree to the deal. Now, if they issue a statement that says 10 days, 15 days, 100 days, 100 years, makes no difference, we're not going to agree to your deal. If they say that, then I'm guessing all bets are off. The carrier group, both carrier groups are in place. This military buildup, we haven't seen anything like it since 2003. I think I gave you that date earlier. So, war's not a good thing. Any human life lost is a horrible thing. So, pray for the world. To become a member, email Valerie, support@cfrn.net. Let her know you'd like to become a member, and she'll send you all the information you need to get signed up. Once you become a member, you get 2 hours of live interactive training every trading day. On top of that, you get private one-on-one mentoring, no extra charge. All you got to do is ask. The strategy you learn, the indicators you use as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle, as I've shown you today, and as I show you each and every day. It's simply how markets work. That's why it's so important that you learn how to read the chart so that you know where to anticipate support, you know where to anticipate resistance, and you understand that 20% of the time or less you're gonna miss it. The market is going to do something completely different than what you thought. And instead of going back to the drawing board and trying to figure it all out again, you just look for the next opportunity. You gracefully accept the fact that Getting stopped out is as much a part of trading as breathing is a part of life. End of story. Question, here's what separates those who are able to trade for a living and those who aren't, is whether or not they can accept the statement I just made, the fact I just shared. Do some soul searching. Ask yourself. Now, people can change, but change takes work. Are you willing to do the work to change? I can't answer that for you. And I don't think you can answer that question just off the top of your head. Pray about it. Talk to God. Ask Him what He wants you to do. Because in the end, that's what really matters, right? Also, as a passport holder, you're going to get the Logic 247 alerts, which help you learn how to read the chart, as I just said. You get the concierge trade alerts every evening, typically 5 minutes ahead of the Globex open. Every Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. And every Thursday night, you're able to attend the members-only workshop at 8 p.m. Eastern. Last but not least, you get all the golden keys that open the private channels in Telegram, and there's quite a few. It's everything a trader needs, all under one roof, one low price. Let's wrap up this week with our good word for today. Do it all for the glory of God. 1 Corinthians 10:31. Whatever you do, do it all for the glory of God. When it comes to your calling, and we all have a calling, observe these two things. Number one, God does not call the qualified. You probably think you misunderstood what I just said, so I'm going to say it again. God doesn't call the qualified. Well, that doesn't even make sense. He qualifies the called. God will call you to do something you're not smart enough to pull off. A God-ordained dream will always be beyond your ability and resources. Why? Why would God play that game with you? It's not a game. It's so that you learn you have to rely on God every single day. You never look at God and say, hey, don't worry, buddy, I got this. No. He's got this. David said in Psalm 127, unless the Lord builds the house, the builders labor in vain. In John 15:5, Jesus said, if you remain in me and I in you, you will bear much fruit. Apart from me, you can do nothing. Paul said in 2 Corinthians 3:5, not that we are competent in ourselves to claim anything for ourselves, but our competence comes from God. Number two. Now remember number one. Jot it down. God doesn't call the qualified. He qualifies the called. Now number two. Instead of being critical, be creative. Often, criticism is just a cop-out for those who are too lazy to solve the problem they are complaining about. Instead of criticizing movies or music, produce a film or an album that is better than whatever it is you're complaining about. The most constructive criticism is called creativity. We should be more known for what we're for than what we're against. Anybody can point out problems. We're called to solve them by writing better books, starting better schools, drafting better legislation, and as God's children, we are anointed to do it. 1 John 2:27. But the anointing which you have received from him abides in you, and you do not need that anyone teach you. But as the same anointing teaches you concerning all things, and just as it has taught you, you will abide in him. And that's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.